Gold and silver has shown a good dip yesterday, a much awaited drop here after a while it is crude oil and natural gas which is traded beautifully bullish as expected and predicted. I have mentioned very beautifully that oil has formed a very good base at 61.8, 61.5, and you can stay bullish. What has happened? We have seen oil prices moving towards 65, and in fact natural gas has also seen 3.2 now. What to expect from these four instruments today? Where to enter, where to exit, how to profit? We're gonna see here in this one single update. With the help of charts and indicators, we'll arrive at the levels at which you can take a trade and trade with profits. Subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live market updates and join the channel memberships here on YouTube to support the effort. The next update will be released before the US session. Do watch that as well. Let's start. See, this is the only channel to deliver twice a day updates. So do not miss to watch the next update before the US session. Let's start. First gold, followed with silver, and then crude oil and nat gas. Watch till the end. On the early charts, what's happening in gold here? See the drop, slight retracement, bigger drop, slight retracement. Now the moving averages are crossing over here. Slight bearish indication it is. And thus this becomes the crucial resistance for gold to break beyond 3750, 3760 zone. Remember, this was the support yesterday. Now this is going to be the resistance here for the day. As long as the price stays below 3750 and 3760, do not trade this as bullish for the day. Lower highs are seen, lower lows are seen. Let's wait for it to trade below the 100 period as well, which means if you see it is staying below 3730, 3728, you can take a sell. Very important for gold prices to trade below 37 14 16 zone. Now that is the next support zone, and if that is taken, you can expect a further dip here. Right now, too early to jump onto that conclusion. It is not yet signaling such a great drop. Stochastic has dropped. The MACD has seen a good dip. Remember, what did we discuss? That it has formed a twin top. It can move towards the bottom. Now, if you look at this from these levels, we have seen a bounce back. So it can possibly reverse from the current levels. We have to watch out. But notice when it is bullish, it has hit plus 20. If it is really bearish, it can in fact move towards minus 20 levels. Let's wait for the next move. RSI placed comfortably. Coming to on the 2-hour charts, the 50 period is still offering it a little support. Just let it trade below 3730, 3728 zone, and you can expect slight drop from there. You can expect 3716 levels as the next target, and then in fact 3700 mark will be seen, the critical number which gold would like to break. Also notice what did we discuss, that consolidation. See this, first bounce back, second, then third bigger rise, bigger retracement. Now this is a further bigger rise, so it might follow with a further bigger retracement. This means that price would like to fall in this zone, 3680, 3650 zone. Let's wait for the move today. Stochastic rising, which is still supportive for further bullishness. Look at MACD crossing over here at the top, trading with divergence, staying bearish, looking downwards, and it has still got lot much of room here on the downside. RSI looking downwards as well. Coming to 3 hour, similar observation here on the 3-hour chart. Since the drop, slight retracement, looking downwards. If you see it is staying below 3728 levels, stay short for 371620 as the first target zone, and if that is taken, 3700 should be seen today itself. Now the most critical number for the day is at 3684.85. If at all it trades below 3684.85, you can just stay bearish from there. What could happen? We can in fact expect it to move towards 3660 or 3640 levels. Stochastic rising, the MACD crossing over at the top, trading with divergence, staying bearish. Yes, it has seen the top. This is also what we discussed yesterday. See, this crossover might invite more bears here, and now it is looking downwards. RSI is looking downwards as well. Coming to 4 hours. Now, one important observation here is, see, till it respects yesterday's low, we have to be careful with the swells. It has to trade below 36, 37, 16, 37, 14 levels in order to confirm further downside till towards 3700. As long as yesterday's lows are respected, you have to be careful with the sells. Now, see on the 4-hour charts also what's happening. We have seen a swing. Price can still take a U-turn from here. Why? See, preceding candle, a greener candle swing here, it can still bounce back. Thus, only selling entry I will recommend is at 3730, 3728 levels, and then wait for 3720, 3715, 14, and then below that you can in fact expect further drop towards 3700 mark, the next target zone. Stochastic rising from the oversold. See the MACD crossing over at the top, trading with divergence. Now, see the candle sizes are still increasing and it is still trading with divergence, which is a slight bearish indication here as well. RSI is also looking downwards. Coming to daily, on the daily charts, look at the 5 period moving average is still offering it a very good support here. And today again we have to wait for price to trade below the 5 period moving average. We have to wait for the price to uh, hit or trade below the yesterday's lows. Now what will happen once it trade below yesterday's low? You can expect it to move towards 3700 mark, which is very crucial for gold to break below. Now also notice what's happening. It has formed a support here. Since the support, first rise retracement, second bigger rise, so bigger retracement could follow, where it is heading towards 3660, 3640. Any drop below 3660, 3640 is the confirmation of reversal in gold prices, much awaited reversal in gold prices here. Till the time it stays above 3640 levels, you should not be treating this as bearish for the week, for the month. Stochastic looking down, the MACD is at the top here, trying to converge, crossover. A crossover here may lead to a complete reversal. RSI is staying overbought, trying to come out of the overbought zone. So considering this, what you should, where you should buy, where you should sell, first let me give you the buying levels here. And before I give you the levels, if you are willing to learn this art of trading, do join the mentorship batch. The current batch started, the 34th batch started last week, 35th batch dates are announced. Be a part of it. Yes, what you get is all the tools, techniques and strategies so that you can identify profitable trades with these. You will also get the recordings of the sessions. You can also attend the live sessions as many times as you want. And yes, those, you will be also part of our students alumni group where you can discuss. And yes, we will also be sharing the trades and trends in the group here. Be a part of the mentorship batch. Register yourself now. Reach out to me for details. Else you can be part of my signals channel on Telegram, where trading as per the signals you can profit. Connect with me, write an email, ping me or Telegram for your queries. Those looking forward to a trusted partner which offers you swap-free account, lowest spreads, no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. So now first is where you should sell. First is where you should buy. I will now only recommend you to buy if you see 3740. Remember yesterday I had mentioned this as a crucial support. Now this is going to be a crucial resistance here. So if you see gold trading beyond 3740 levels, you can expect the price to move towards 3748.50 zone, the first target, and then 3758.60 the next. If at all gold decides to trade beyond 3758.60, stay bullish from here. This is the zone from where you can expect the price to move towards 3774.76, 3790, and then 3804, 3816 levels will be seen. Chances for this appears less, but yes, this is gold and these are markets. Anything and everything is possible. On the downside, I will recommend you to sell at 3730.28 zone, expecting it to move towards 3720, 3714.15. And if at all it trades below this, ideally I will be looking forward to 3700 and then 3684.85. Any drop below 3684.85 is a sign of greater bearishness. Stay bearish for 3660, 3640, and any drop below 3640 is a confirmation of greater reversal in gold prices. Take your trades and positions accordingly. Let's move to silver now. Silver, if you see on the early charts what's happening, the price is just staying around the zone and it is finding it difficult to trade below 4380 levels. Yes, 4380 appears to be a good hurdle. Despite multiple candles trying to breach it, we have seen a good pullback. So this zone between 4380, 4360 is very crucial for silver to trade below. Now the moving averages have converged, but these are shying away from crossing over here. We have to wait for it to trade below 3680 in order to confirm a dip here, 4380 in order to confirm a dip here. And then you have to be extremely cautious of the zone 4380, 4360, below which only you can say now the bears are back and you can look forward to a drop. Notice drop, retracement, higher lows here, lower highs. So let it come out of this consolidation zone and more bearishness might prevail below this. Stochastic is still at the top while MACD has hit a bottom and it is just crossed over. This is a supportive sign for further rise, but notice this is silver. If it can hit the highs at plus 40, why it cannot move towards minus 40? Let's wait for this crossover. Let's wait for it to trade below 4380, 4360, which will confirm further down move. RSI placed comfortably. Coming to 2 hour, on the 2 hour chart, similar observation, drop, retracement, drop, retracement. lower highs here, lower lows here. Let's wait for it to trade below 43.80, 43.60 zone, and then below that more bearishness might follow. Yes, silver is showing slight signs of weakness after a while here. Notice what has happened. Good rise, then a stronger pullback. Again, a good rise. So it might call for a little pullback, but only and only if it trades below 43. That's the confirmation of reversal here in silver prices. Then you can say now it is turning bearish. Stochastic rising, MACD is still trading with divergence, staying bearish, looking downwards. RSI is also trading with slight bearishness though. Coming to 3-hour charts, very important on the 3-hour charts. The 20 period is offering it a very good support. It is pretty crucial for silver to trade below the 20 period. It is pretty crucial for silver to stay below 43.80 and 43.60 zone. Very crucial for silver, because once it trades below this, it might show an accelerated move on the downside. We have to wait here. If you see the stochastic, this is drop trying to bounce back. The MACD, interestingly, see all of this we have discussed in our update. See, this is the top here, it is crossing over here. This might invite bearishness, and that is what we had seen here so far. RSI has also come out of the overbought zone. Coming to 4-hour charts, when you see the 4-hour charts here, on the 4-hour charts, since the drop, it has retraced, it has found the top. Higher lows are seen, waiting for it to trade below 36, 43.80, 43.60 zone. Very crucial for silver to trade below this. That is the only point I will say. Now it is turning bearish, and it is possible because see, since the drop, the candles have not closed above this trend line, which means now it is pretty important for silver to first trade beyond 44.10 and then 44.30. If these two levels are taken, expect it to move towards 44.50 and higher levels. Yes, taking the support, it can bounce back sharp, and this time if it trades beyond 44.50, it is going to rally towards $45 levels. Stochastic rising, the MACD crossed over, trading with divergence, staying bearish, looking downwards. RSI has come out of the overbought zone as well. Coming to the daily charts. On the daily charts, one critical observation here is the 5-period moving average, which is so far offering it a very good support. Now see this, and this is also what makes 43.80, 43.60 as a crucial support for the day, because preceding candle comes with higher lows. And now once it trades below 43.60, what could be expected? We can expect it to erase the gains from this, which means it can slide all the way towards 43 here. Be watchful of this. If you see the stochastic, this is overbought, trying to cool down. The MACD is trading bullish, waiting for it to converge, crossover for sell. RSI is staying extremely overbought. So considering where to buy, I will recommend you to buy at 43.10, expect 44.10, expect 44.25.30 as the first target zone, then 44.50 as the next. If this is taken, stay bullish. There is no looking back from here. We are looking at $45 zone very soon, chances for which appears to be less so far. But yes, once it stays beyond 45, stay bullish for 45.40, 45.70 levels. Let's see if it tries to deliver this move. Chances again appears to be less. While on the downside, I will recommend to sell silver at around 43.80 levels. The higher price has to be below 43.80. Now rather, I will say exercise caution as long as silver stays between 43.80, 43.60. It can reverse. Below this, expect 43.40 as the next, and if that is taken, then 43.10, 42.80 and then 42.50 levels will be seen as the next targets here. Take your trades and positions accordingly. Now let's move to crude oil from here. See, crude oil has moved towards higher highs here, beautifully respecting this channel, and now I'll wait for it to trade beyond 65.1, 65.2, because a move beyond 65.1, 65.2 will confirm the breakout move towards 65.8, 66 here. What's happening? Look at every rise, it is followed with a drop, and here itself I have mentioned that it is breaching this channel. We can look forward to higher highs. Now, second point to note here, look, the rise is sharp, the retracement is gradual. The rise is sharp, the retracement is gradual here, and it is looking still upwards. Now the resistances level are now going to be the crucial support for crude oil here on the downside, and thus you have to wait for it to trade below 64.4, 64, then 63.6, and then 63.3, 63 level. Still 63.3, 63 is not taken. You should not be treating oil as bearish. That is a very clear answer. Yes, below 63.3 and 63 is where you can say now it is turning bearish. Moving average is trading with divergence, staying bullish. Stochastic at bottom, the MACD crossing over here at the top. Not so supportive sign for the bulls, because see, this crossover is coming at a high here. This might call for a little pullback. RSI coming out of the overbought zone here. Look at 2 hours. Now here we have discussed why it is a very crucial number, 61.8, 61.5. This is almost 6th to 7th attempt by oil to break below this, failing to do so. Now another way to look at it is here, see, slightly higher highs are seen and slightly higher lows are seen here. This is still a retracement. So now it has to trade beyond 65.1, 65.2 in order to confirm a reversal here. Look at the 2 hour charts. The price is now seen trading below 5 period moving average, which suggests that in fact if you see it is staying below 64.4, you can take a sell and expect it to move towards 64, 63.8 and 63.4 levels here. Very crucial, 63.8, 63.6, 63.3 levels, very crucial for crude oil to trade below. As long as these levels are respected, you should not be treating oil as bearish. Stochastic looking down, the MACD is trying to converge here, not yet crossed over. The RSI coming out of the overbought zone here, coming to 3 hour. On the 3 hour chart, see, it has posted a reversal sign, and since then we have seen 3 bearish candles. Now let it stay below 64.4, you can take a sell for 64, and then once it trades below 64, again we have to be careful till 63.3. 63 is not taken, it's not yet bearish. If you look at the move here, rise retracement, this is a bigger rise, so it might follow with a bigger retracement. But if it gives you a breakout from here, this is going to rally strong towards 65.8, 66, and in fact 68 and 70 levels very soon. Moving averages crossing over here is a supportive sign for further bullishness. Stochastic overbought trying to cool down. The MACD, you can see crossing over at the bottom, rising here, staying bullish. RSI is overbought as well. Coming to 4 hour, on the 4 hour chart, similar observation, bigger rise, bigger retracement. I hope this is not the third time when it is going to move all the way towards 61.8, 61.5. Today's move will decide, because see, if it delivers a breakout from here, it is going to be a stronger rise all the way towards 66 and in fact 68 levels. Possibility is there. So today's move is what you should watch out for. Right now I'll say, see, bigger bullish candles, slight retracement, it might take the support somewhere here at around 64.5, 64.4. If that is taken, then you can expect slight bearishness, and then a possible bounce back can be seen from there. Moving averages crossing over here, which is a very good sign for the bulls. Stochastic overbought, MACD is still divergent, bullish and rising, RSI at the top. Coming to daily, now on the daily charts, it is very crucial to note the support it has created here, 61.8, 61.5, and this is the fourth time it has taken the support. Remember, the stronger the base it creates, the difficult it is to break down, and now it is trying to move upwards. This might deliver stronger bullish candles from here. Notice what is happening: drop, sideways movement, and then a good rise is seen. Again, lower lows, sideways movement. Now it might show you a good rise. However, now it is crucial to note, in the long term it is very crucial for oil to trade above 70. Now that will be the confirmation of a proper reversal. Now today's move is going to be very crucial as well. Moving averages have started to converge. If at all it decides to trade beyond 65.1, 65.2, stay bullish. We are looking at 65.8, 66, and from there it is going to move towards 67.2, 68 as well very soon. Stochastic rising, MACD divergent and bullish, RSI flat here. And now before I give you the trading levels for the day, do not miss to join the mentorship batch, where you get all the tools and techniques and strategies in order to identify profitable trades and increase winning ratio. You'll also get the recordings. You'll also be part of our students alumni discussion channel. And yes, if you're just willing to trade as per the signals, be a part of my signals channel on Telegram. Reach out to me for queries. Those looking forward to a trusted partner which offers you a self-free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. So where you should buy, I will recommend you to buy at 65, 65.2 zone. If oil trades beyond this, stay bullish for 65.8, 66. And once this is taken, ideally in the near future, oil is going to head towards 67.2 and 68. Breaking beyond this 70 is a must. Right now I see that it might take a little more time before showing such a great reversal here. While on the downside, I will recommend you to sell at 64.4 levels itself. Expect 64.1, 63.8, 63.5, 63.3. Now this is going to be the crucial support here. Below this expect 63, and if this 63 is taken, then you can say now we are looking at 62.5, 62.3, the most strongest support, and then 61.8, 61.5, the next one. See, on the downside the supports are getting very very strong. You have to be cautious here. Now 63, 64, this complete zone which was the preceding resistance, now this should act as a stronger support here. So take your trades accordingly. Now let's move to natural gas. See, gas prices is hit 3.2 zone, and now if you look at the move here on the hourly charts, the moving average is crossing over here. Supportive sign for further bullishness. Rise retracement, rise retracement. It is still delivering higher highs, higher lows here in a flat top. So now if you see it is staying beyond 3.18 levels, 3.18. When you see the lower price above 3.18, you can stay bullish from there. And 3.18, 3.2 is a good resistance zone, and let me include 3.22 as well. So 3.18, 3.2, 3.22, this complete zone is very crucial for natural gas to break beyond. A move beyond 3.22, stay bullish for 3.26, 3.32, and in fact 3.4 here. The moving average is crossing over, is a good sign for the bulls. Stochastic overbought, MACD flattened here, though it is at the highs here. RSI right now trying to suggest slight bearishness. Look at the 2 hour charts. Now, important thing on the 2 hour chart, see till yesterday what it has done, you can notice this. See this drop retracement, till here it was lower highs, lower lows, and now it has breached this channel. Today's inventory data is going to be, today's natural gas storage data is going to be the driving factor for gas prices, and thus once it trades beyond 3.22, you can definitely expect more bullishness. And then 3.25, 26, 3.3, 3.32, very very crucial for gas to break beyond. Notice it has formed a double bottom, and now from double bottom if it tries to rise, we can see it hitting 3.4 very soon. Stochastic rising, MACD rising, RSI rising, is still supportive sign for the bulls. Look at 3 hour charts, similar observation. Rise retracement, now trying to deliver a breakout, and thus 3.18, 3.22 zone is very crucial for natural gas to break beyond. Indicators are comfortably placed and still having lot much of room on the upside. Look at MACD crossing over at the bottom, trading bullish. RSI is flat here. On the 4 hour charts, any similar observation, rise retracement, higher lows here, higher highs here. I'll wait for it to stay beyond 3.2, 3.22 zone in order to confirm the move towards 3.2526 or in fact 3.3, 3.32. Moving averages are convergent. Stochastic has dropped. The MACD crossed over at the bottom, trading with divergence, staying bullish. RSI flat here. Coming to daily, on the daily charts, you can find out the moving averages have crossed over, and these are almost staying flat. For it to diverge, for it to start diverging, see 1 point higher lows means at least till towards 3.1 levels. We should not be treating natural gas as bearish. Is it possible for it to breach this? It is possible, but 3.1, 3.07 is going to remain a crucial support zone. If at all it decides to trade below 3.07, you can expect it to trade lower towards 3 very, very soon. And at the same time, remember, forming a tail, it can give you a breakout, and the breakout is going to be equally strong, where it might head towards 3.3, 3.32, or in fact 3.4 levels. Stochastic rising. Now interestingly, this is worrisome point, because see the MACD has crossed over for a sell here, though it is not that it cannot rise further, but right now it is staying slightly bearish. RSI is placed comfortably. So right now we know that now natural gas is a crucial junction where it has to decide whether to give you a breakout or to break down here. So now I will recommend you to buy only at 3.2, expect 3.225, 3.25, 3.26 as the next targets. If at all it decides to stay beyond this, stay bullish for 3.3, 3.32, and if this is taken, then 3.4 is a must very very soon. On the downside, I will recommend a selling entry at 3.14 levels, expected to move towards 3.1, 3.07, and if 3.07 is taken, 3.05 and $3 levels will be there. I have mentioned several times, till 2.97, do not treat natural gas as bearish, it can bounce back. And now 3.07, 3.1 is one such support, only below which you can expect more bearishness to prevail, and then 3.05, if it breaches, certainly you can say that it is turning bearish, else it can bounce back sharp up again. Take your trades accordingly. See you again before the year session with more updates. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live market updates, and join the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable trading day ahead. See you again before the year session. Thank you.